Welcome back to FT Markets. It's been rocky times for Switzerland lately, one of the world's richest and most stable economies. In January, the country's central bank was forced to lift the cap on the Swiss franc, and the subsequent rise in the currency has hit the economy, while inflation has remained worryingly low. The Swiss National Bank meets this week, and with me to discuss its options is Anezka Christovova, who's a currency strategist at Credit Suisse. Anezka, welcome to the Financial Times. Our first chart just shows that very dramatic rise in the Swiss franc when the SNB lifted the cap in January. Since then, it's remained remarkably strong. Can you just set for us the global context? Why is the Swiss franc doing so well at the moment, so strong?
So obviously we are in an environment where interest rates are extremely low everywhere in the world. And in this environment where also risks are quite present, obviously we have Greece on the headlines, Swiss franc as a safe haven is attracting still a lot of, we would say not even inflows, but a lot of money remains in Switzerland as a safe haven, while interest rates abroad are really not making it all that punitive to keep your money in Switzerland yet.
Okay, there's no opportunity cost for leaving your money in Swiss francs.
It's increased. Obviously, the SNB has got 75 basis points, but it's perhaps not punitive enough against all the risks investors are facing
If
abroad.
we look at the strength of the Swiss franc on a historical basis on our second chart, this is the real effective rate. If we look since 2000, since the whole of this century, we're at record highs. That must be causing quite a lot of pain for the Swiss economy.
It is causing pain. Obviously, we are still realizing how much pain. Obviously, when they imposed the floor in 2011, the economy had a certain period to slightly adjust to the exchange rate. Now it got a new shock, and we are only now slowly realizing how much pain it is truly causing to the economy.
Do you think this could cause a recession in Switzerland?
Well, we already had 1 quarter of negative growth. The SNB expects that this is temporary and that things are going to improve, but it remains a very difficult judgment to make.
Because, of course, what central banks try to do, they try to target the inflation rate. And if we look at our final chart, slightly complicated, we put lots of things onto this chart, I apologise for that. But look at the red line, that's the Swiss inflation rate going down even lower than it has been in the Eurozone. Actually, in the Eurozone, we've seen a bit of a recovery. That must be weighing on the mind of the SNB.
Absolutely. So we know that they expected some negative shock. Clearly, when they made the decision, they made it with the clear view that this is going to cause some pain. Now the question, how much pain? How much pain are they willing to live with? Inflation is tanking, and I don't know if yesterday we got producer and import prices, which were again surprised to the downside, accelerated the decline. So,
yeah, if we see though, if you can just make out the grey line, they have actually cut, as you said, interest rates to minus 0.75. Do you think they'll go further?
I think it's a possibility. They have a meeting this week on Thursday. We think it is too early for them to act. They're still watching the economy.
Wait for that, see how much pain they need to go through.
Exactly. We think they have a scope to cut further if they have to. I think that's important to say. I think the market is still uncertain how much negative can rates go before you truly experience technical difficulties with the cash circulation in the economy. We think they still have a scope to cut. Now the big question is, do they use it and when?
Going to even lower would be quite unprecedented for any central bank. I mean, is the Swiss National Bank sort of that innovative? It's a very conservative institution.
I think they are doing what they can in the situation. If they had the option to do something more conventional, obviously they would do something more conventional.
Is cutting interest rates the only thing they can do? I mean, they could intervene more in currency markets, presumably. And is there other options?
Well, we are considering 4 options. The first one is a rate cut.
Yeah.
The other one is a bit technical. It is lowering the exemption threshold, so how they set who is actually charged at the SNB.
Imposing negative interest rates on more people, basically.
Exactly. It affects different institutions in a different way, so they could lower it, and this would catch a lot more of the side deposits held at the SNB.
And the other 2 options?
The other 2 options is FX interventions, or the 4th option is a QE program where they purchase foreign assets. That's something the IMF has recommended. And they have said that it's a policy option they are analyzing and looking at.
But your best bet is that nothing yet this week. We have to wait a bit longer.
Our base case is nothing yet this week, but SNB has taught us a lesson. It is a central bank which can always surprise. So we prefer to be quite cautious in that assessment.
Anezka, thank you very much. We'll have to stop there. So nothing expected this week, but the Swiss National Bank, as it's shown already this year, sometimes good for a surprise.